welcome back. You're watching The Money Show, and quickly let's begin our viewer queries section. I have with me Abhijit Choksi, founder Stockify.in. Abhijit, hi, good evening and welcome to the show. We will take Pramod's question. He wants to invest for the next 23 years and has been investing for the past 2 years. And he has a set of funds which details are with you also. And he's aiming for 5 CR in 23 years, invested 20 lakhs for now, and you have the funds details. So what's going to be your recommendation?
Yeah, right. So as I can see, Pramod has a good mix of funds like ICICI large cap and mid cap. He has a good 6K SIP going on, which I believe he should continue holding. HDFC Flexi Cap and Nippon Multicap he can hold. He had a question whether he should continue with SBI mid cap because the fund has not performed really well. However, if his vision is for next 10 to 15 years and above, then he should hold on to it because generally mid caps are also cyclical in nature. His returns will come reverse to mean in next few years, so he can hold on to it. With total SIP of 27,000 and with 20 lakh of existing investments, I believe that he's on track for achieving his goal of 5 crore. I'm assuming a CAGR of 11 to 12% here going forward. And if he has any other questions, please let me know.
Take Dilip Kumar's question, and very interesting question. He wants to know what is the tax treatment of multi-asset funds, and is it at par with equity fund as equity funds or debt funds? Okay, I have no idea what's the kind of multi-asset fund he's talking about, but again, this comes under hybrid category. We are talking about more than one asset classes over here. So what's the tax treatment depending on the exposure of the asset class?
Right. So generally, as a thumb rule, multi-asset funds are not treated like pure equity because there is a rule that if the equity exposure is more than 65% in a fund, then only it will be taxed like equity. But most fund managers do not keep 65% or more. But if, let's say, in that particular fund, if the exposure to equity is more than 65, then they should be treated as an equity fund and it will be taxed like equity mutual funds, which is 12.5% for LTCG and 20% for STCG. But as I said, most like if we talk about generic funds, then it will be treated as a debt fund because the exposure of equity will be less than 65%. So then it should be considered like a debt fund, and the taxation slab will be 20% if it is less than it's more than 3 year, and for STCG will be added to the income and it will be taxed as per the slab rate. But as a thumb rule, you should just check whether how much percentage equity exposure it has, and accordingly you can adjust.
All right. Thank you so much, Abhijit, with that for taking time out and helping our viewers with their financial portfolio queries. Thank you so much. All right. With that, it's a wrap on The Money Show as well. But then I'm going to leave you with our WhatsApp number and email ID where you can keep sending us your queries. Thank you so much for watching. Goodbye.